Hi guys! Another wonderful day to all of you! As promised, this is the part 2 of Basic Accounting for Non-Accountants. But before anything else, let me share to you the good news for today. This is from Isaiah chapter 41 verse 10. Fear not, for I am with you. Be not dismayed, for I am your God. I will strengthen you. I will help you. I will uphold you with my righteous right hand. Okay, this is the part 2 of our part 3 series for the basic accounting for non-accountants, which is income statement or profit and loss statement. The income statement provides a financial summary of a company's operating results during a specified period, which includes revenues and expenses, profit or loss. The sales or revenues represent the inflow of cash from clients and customers for services rendered or for goods sold by the business. It refers to the total sales of merchandise, goods sold to customers for the period, and it is supported by a source document called sales invoice. On screen is the sample of sales invoice, wherein detailed explanation and how to fill up this form will be discussed in the future videos. On screen is a sample of income statement, wherein the major components are sales, cost of sales, gross profit, operating expenses, operating income. Also, we have other income, income before income tax, provision for income tax, and we have the net income for the year. Sales return is also shown in the income statement, wherein it represents returned merchandise by the customer due to defective goods. It reduced sales by the amount of product returned by the customer. To illustrate, I used the balance sheet sample number 3 shown in the Part 1 series, wherein Mr. Cruz sold 300 steel bars, assuming a return of 2 defective steel bars amounting to 500 from the sales of 75,000 to come up to a net sales of 74,500. So the journal entry of this sales return is debit sales return 500 and credit cash of 500. This is to record steel bars which are defective and also to return the cash paid by the customer. Another deduction from sales is the sales discount. Sales discounts are categorized into two, namely we have a cash discounts and also trade discounts. Cash discounts are granted to a customer to encourage prompt payment, while trade discounts are offered to customers to encourage them to patronize the business. So these are deductions from gross sales to arrive at net sales. Next is the cost of sales, which represent the cost of the goods or services given to the customer in exchange for the amount or asset received. It is presented after the sales account in the income statement. To continue, this is the gross profit. It is the difference between sales and cost directly related to such sales. On screen is a sample transaction to correlate in the income statement. We have here sample number 1. If Mr. Cruz purchased 300 steel bars for 200 pesos each and sold it for 250 pesos each, what is the journal entry and how much is the gross profit? To record the purchase of 300 steel bars that will be reflected in the balance sheet report, we have debit inventory of 60,000, credit cash of 60,000. Then, for the sale of 300 steel bars, we have debit cash of 75,000, debit cost of sales of 60,000, credit sales of 75,000, and credit inventory of 60,000. Remember that only these two accounts will be reflected in the income statement, the cost of sales, and the sales. And the gross profit of this transaction is 15,000 pesos. Next item in the income statement is the operating expenses. Operating expenses are classified into selling expenses, general and administrative expenses. Selling expenses are expenses associated with distributing, marketing, and selling of products or services. This includes storing, packaging, and delivering the merchandise. Other expenses related to the selling activities. While general and administrative expenses are expenses in administering the business. These are all operating expenses not related to selling or to cost, such as salaries, power and light, transportation, office supplies, taxes, fees, rentals, depreciation of furniture and equipment, and expenses of general executive and staff. Here is a sample of operating expense transaction. Mr. Cruz earned a gross profit of 14,500 from selling steel bars as presented in the previous slides. He paid for the following expenses: salaries of 2,000, stall rental of 4,500. What is the journal entry and how much is Mr. Cruz's operating income and operating income rate? For the journal entry, we have debit salaries of 2,000, debit rent expense of 4,500, and credit cash of 6,500. This is to record payment of salaries and store rental. These two accounts will be reflected under operating expense account of the income statement. Operating income of Mr. Cruz is at 8,000, while the operating income rate is at 10.74% by dividing operating income of 8,000 from sales of 74,500. Next item is the operating income, which is also called the operating profit. This is the profit earned from the company's normal business operation, and it is shown after the operating expense account. That ends the part 2 of this series, and the last topic is the statements of cash flow available next week. By the way, guys, you can check out again the part 1 of this series and correlate in this topic. Thank you so much, guys, for watching. Thank you, Lord, and God bless us all. Please subscribe, like, and share. Click the notification bell for more updates. This is your VLL Love.